Welcome to this video. In this video, I'm going to be doing a stock analysis of Surf Air Mobility. So if you like this video, please don't forget to leave a like and subscribe. And of course, remember this isn't financial advice. It's purely for entertainment and educational purposes. Now, what is Surf Air Mobility? It is an airline, as you can see on here, but they're not a traditional airline like Delta or United Airlines. They also have that, but they use a lot smaller planes like this one. And then they use on demand. So say you want to fly from some place in Hawaii to another place in Hawaii, you can charter those planes, and they are also in the United States, and they are only in the United States. The reason I like them a lot is because they use smaller planes and they let people charter them. And charter them means you book the entire plane. So this is for maybe a bit more wealthy people, but their prices are quite good because they don't only charter planes, they also have normal flights. I'm going to show you right now, as you can see down here. This is how they make the money. Schedules and on demand. As you can see, it actually fluctuates quite a lot, but they have increased the schedule a lot more because they have purchased two airlines, one in Hawaii and one called Southern Airlines, one called Mokulele Airlines, I believe it's called. And they use the same kind of small planes, and it's quite interesting because they also have a partnership agreement with Electra, which is making one of the first fully electric and fully hybrid planes, and they are estimated to get that on the market in 26. And then you might think, well, why is that important? Well, because electricity is much cheaper than gasoline, and newer planes can actually fly longer than normal planes. Now, and by that I mean take a Cessna like this one, for example, and then take a electrical airplane like this from Textron. Well, actually, this one from Textron can fly longer than a typical Cessna. That is great because you just need to charge it at the airport. Now, also, as you can see down here in the income statements, they are increasing their money more and more and more. Now, we did see this year in 2023. You might think, well, what happened here? Well, they bought a company. That is why their net income is so low. But as you can see, they're increasing their net income more and more. No, not net income. Their revenue more and more. And hopefully, also, the net income is going to be positive by the end of this year. At least that is what they're hoping. And we can also see that up here in the EPS, as you can see, this means to earn money per share, which is quite nice. And hopefully, we are going to see that by the end of this year. Now you have to be a bit worried about this stock because we recently, just last year, had a reverse stock split, which means for each 7 stock you had, you'd gain 1 stock because the price was too low. And as you can see, it traded quite highly, so you need to divide this number by 7 to get the original selling point. Now the problem with this is we are trading quite cheaply right now. This means a lot of people sitting here have a loss, so maybe someone who doesn't believe in the company anymore is thinking, let's say this rises to $3. They're gonna think, nice, I can get out of the stock and cut my losses and run. So this means chances are people sitting before you, buying before you, are gonna get out of the stock and don't want to be in it anymore. So if you buy the stock, be very, very careful because it is quite a speculative stock. So everybody sitting up here, they're gonna sit at a huge loss also because these stocks were beaten together or reverse stock split, of course. So they're sitting at a huge loss, which of course isn't great, so be a bit wary. Now, if you look at the stock recently, as you can see, it has fluctuated quite a lot. We have two positive earnings. We had this one all the way back in November of 2024, and we had this one on March. Oh, that, as you can see, quite great, up by 200% and up by 10%, so quite great. You did see this poor earnings down by 1%, but really it's 1%, and it's quite interesting to see how little the market actually reacted to it. I know we fell a bit on the earnings, but considering how small the company is and they actually missed the earnings, the market doesn't really react that much, which is of course great to see. However, we are recently just having a death cross, as you can see here, on the 2nd of June, which of course not that great because this means that the 200-day moving average is above the 50-day moving average, and this means that there is currently a downwards momentum. We can also see that in the RSI, we are fluctuating between periods, and by that I mean, as you can see, either we are trading up here or we're trading down here. We don't sit on the middle like this for very long. We have had quite a nice period here where we had this formation here, as you can see, we're traded right on the middle, so not up or not down. But either that, we are trading oftentimes quite up high or quite down low. Now, if you don't know what the RSI is, that is the relative strength index. So if something is below 70 but above 50, it's in the upper channel, which means the stock price should rise. If something is below 50 and above 30, it means the stock price is going to fall because it means there's more sellers in the market, and this here means there are more buyers. Now, if something is above 70, it's overbought, which, as you can see here, is sharp rises. This means it's overbought. And when it's down here, it's oversold, as you can see. So often be wary about that. As you can see, currently we were trading down here. As you can see, we even had an oversold period, and we are forming a RSI that is going back up. So chances are we're going to see it back up. Now, as I told you, this is how they make the money. As you can see, they don't make that much money. As you can see, it is a relatively small company. But we want to see this one right here, this one on demand, grow quite a lot faster than the scheduled one. And that is because on demand, they can take more than they can the scheduled. We want to see scheduled grow as with the on demand as well, but the on demand one is the one we want to see the most. And hopefully, once they get their electrical planes, we are going to see them increase their margins by a shit ton. Now, performance of this stock, as you can see right here, 2023, has been beyond dog shit. we have negative, negative, negative. So it has just lost so much of its value, and that is why I'm telling you be wary, because let's say this is a great year and they are going to rise 10% by the end of the year. Well, then they have to rise 70% from where we're trading currently. I think, well, 10% isn't a great year. It is from where we're sitting currently. So yeah, a very, very volatile stock. Now, do I like this stock? I love it, actually. I think it's a great business case. I do think it's going to happen probably in the US. If it's going to happen anywhere, it is going to be the US just because of how big the country is. But the problem is with how small the planes are. Now, of course, if they can use electrical planes, well, then the overall cost is going to fall quite a lot. Now, the technicals on this for the day is a sell shouldn't surprise you, and for the day it is still a sell and it still shouldn't surprise you. As you can see here, we have this death cross here, and even though we're trading sideways, we are overall trading downwards. And we also have these two spikes, but we are still trading downwards. So be very careful with this stock. Now, the 1 year price target we have maximum is up by 393%. That is $12. I think that's a bit too high if you ask me. And there's of course the strong buy, and then we have the hold, which the hold recommendation is up by 33%, which is absolutely crazy. Of course, overall, analyst rating right now are quite great, but of course we only have 2 analyst rating on it, so be a bit careful. If we had 15, it would be a lot more reliable. And the annual earnings here, as you can see, they estimated to EPS lose money, lose money, lose money, and then in 28 make proper money on the EPS. Then as you can see here in the revenue, they are estimating to make quite a lot more money, so they're increasing it quite exponentially. So I think this is a great stock. So maybe keep tabs on it, just watch it for a while, because it wouldn't surprise me if this stock fell to maybe $1.80 within the year's over. I don't think it's gonna rise this year, to be honest. If it's gonna rise, I think it's gonna sit at maximum three bucks at least, but then we'll still be down for the year. But I don't think it's gonna rise. I do think when we see the first electrical airplanes hitting, when they actually get them delivered, I think we're gonna see that rise, because then this margin is gonna skyrocket. Because for 1 kilowatt of power compared to 1 gallon of jet fuel is maybe a tenth, if not a hundredth of the cost. They can fly longer, and because they have fewer moving parts, well, they're cheaper to fix and maintain. It is just a great thing to happen once they get these electrical planes, but they have been delayed quite a bit, so I would be very careful and just keep tabs on it. That was my stock analysis of Surf Air Mobility. So if you like this video, please don't forget to leave a like and subscribe. And of course, remember, this isn't financial advice, but if you want me to make any other videos like this, please leave the comment each for me to analyze in the comment section below.